A very warm welcome once again. If you've already seen the other videos, and this is the second video or the third video you must be seeing, I would encourage you to check out all our videos on our YouTube channel. This is Shravya Reddy, the promoter and chief strategist for Collaris Solutions Private Limited and the Gazelle Partners. The Gazelle Partners is the funding wing of Collaris Solutions Private Limited. And for more details on our company and our vision, mission, value statement, and everything, please feel free to check out the other videos that we have in place. This video has been created as a lot of our um, potential clients and partners. They have been reaching out to us recurrently for the same set of questions almost every time. So we felt that probably it's a good idea to create this video, and we've never done this video presentations ever before. 2023 December, and firstly a very happy Christmas and a very happy New Year. Wish all of your family, friends, and your partners and your business associates uh, a hearty Merry Xmas and Happy New Year to all of you all. So yeah, so this video series we've started to create just from December, because we saw that there are a lot of recurrent questions, queries, and it's going to save all us some time and effort, and it will help us understand each other better before we have our next call. Should you feel that there is a fit between your company and the Gazelle Partners, please feel free to reach out to us. And yeah, so this video is to cover the main frequently asked questions and referral program that we have. So we are based out of India, UAE, and we are open to businesses globally, and we'll cover all of that in this deck. So, firstly, I would like to thank all of our partners, founders, consultants, industry advisors, innovators who are located globally, and they've been associated with us for the last 12 years now. They bring very rich industry experience. They are very experts in their own field. They are subject matter experts. They are entrepreneurs and founders and consultants. We are actively trying to reach out constantly to new SMEs and startups for the larger vision that we have. We have a NGO, you could say a non-government organization in India, which is it's a trust organization. It's a non-profit organization. We are trying to pool all the profits and do something for a much larger cause, but we can get to that much later on. But to help that vision happen, we have collaborated with so many partners, founders, and innovators globally, who are constantly, that we try to help them with their problem of funding. Like, funding is a huge problem, and we see that a lot of entrepreneurs, SMEs, they are constantly looking out for funding, and they are reaching out to various venture capital funds, private equity funds, debt capital, and every business it has a different stage. Like, some are advanced companies, some are little at an idea stage. So thanks for thanks to all of them who have instilled the trust in us, to partner with us, to work with us, and to be a constant support. And because it's a continuous relationship that we would forge as long as a company grows, right? And this is all for the larger cause, as I said, that we are building a fund for an NGO, and this NGO is supporting a lot of schools which are for the underprivileged uh, folks out there, and also to create employment. So we can get to that at a later stage, but firstly I would like to thank all of our associates and our partners. And this slide kind of clarifies the main key people out here. These are just the key decision makers, I would say, and everybody else in the team. So we are like 35 employees, and these are all consultants who work on a case to case basis for various deals. So, thanks to all of them and all our partners and our associate fund houses. So, for people who have a question, like some entrepreneurs have a question, do we have our own funds, and or do we have our? So, our finance wing is very hybrid. So, we have our own fund pool. So, we have pooled funds from UHNIs, HNIs, and some family offices. We have direct tie-ups with the banks and investment banks. We have a collateral database of around 1000 crores INR, 1000 crore INR. You can convert that into dollars. So we have a strong foothold in the investment banking, family office fund pool, and land banks, and this has made us very confidently be able to support entrepreneurs who need funds. And and then we have our legal wing, which is totally into various all the agreements, all the paperwork, and everything which we do is through our associate partner, which is a legal wing, and which is very established, and it's directly dealing with the Supreme Court of India, the High Court, and also the lower courts in India. So we have a very strong legal wing, a very strong finance wing, and years of expertise of various partners and associates who are able to make this vision happen. So, firstly, I would thank all of them. I think now we can move to the next slide. So the first question we've been asked is we want more clarity from on the step-by-step process, and this is a very common question. Like people are when they reach out to us, you know. So first, I would like to explain to you that the step-by-step process. If you have checked out the other videos, or even if you haven't checked out, there is a form. Um, So your business could be at an idea stage, or it could be at a very advanced stage, already in the business. It might be profitable, it might be a loss-making company, it could be anything and everything. We are flexible as a company, the Gazelle Partners and the Colaris Solutions. We are flexible to explore where your company is as on it. First we would try to understand what your company is into, how is it performing, and we will create a customized investment process for your company, just totally tailored to your company. We do not, like the Gazelle Partners and Collateral Solutions, we are not in the business of operating any of the business. We are only strategic partners and capital infusion partners. So I would first say that we are capital infusion partners, and we help with strategy. We help you with a business turnaround strategy, how to grow the company, how to leverage on our network, and also we help you redesign your roadmap. So fundamentally, we are looking for companies which are operators, entrepreneurs who are good operators of business. We look for that firm or the entrepreneur who is good at operations, who can run the show, and we rest the entire responsibility of the success of the business on you, who is the operator. So that we would only supervise, like my company would only supervise, we would audit, we would help with strategic planning, and we will be throughout the journey of the company. So this is the first point which I would like to bring to light. The second point is, uh, so we invest, as I said, primarily we are investors. Fundamentally, at the core of everything, we are investors, but we are very different from other investors out there in the market. The other venture capital funds, the private equity houses, and various fund houses, you might be trying to seek capital, whether it is loan, whether it could be anything. They have their own way of working, but we as a company, Gazelle Partners and Colaris Solutions, we have designed our own customized solution, keeping in mind the pain points of various entrepreneurs out there who are struggling to get funding. The first pain point that we have seen is that One is the dilution aspect. Entrepreneurs are forced to dilute every time they raise capital every year. They go through a lot of struggle to look for more capital. They reach out to investors, and the whole process becomes so complicated. And there's a lot of micromanagement and investor pressure. There are certain targets and timelines and the investors put on the entrepreneur. And then every time they infuse capital, there has to be more and more dilution. So we saw this as a pain point. And the pressure, most of the SMEs and startups, they do not like to work with VCs and private equity funds and these other funds, because there's a constant pressure of performance. Like every month there will be an audit, and then you have to reach those targets and timelines of VCs and private equity fund timelines and targets, because they work on a different ball game. VC funds and investors, they want a higher valuation for the funds that they put into the business. They are eventually looking for 4x, 5x. There are certain multiples that they want to reach out, they want to target, they want to achieve those targets. And to reach those targets, they will definitely put a lot of pressure on the founding company which they are associated with. But my company, the Gazelle Partners and the Circular Solutions, we are not like that. We are flexible in the sense we do not put those hard targets. We customize our solution to your requirement. So if you are a family business and you want to pass on that family business to your next generation, or you want to say you have another plan, you want to sell it off to a larger firm, say 5 years down the lane. So we want to understand that vision, and then we want to work with you through that. And so the point I had mentioned about was dilution. So the repetitive dilution will lead you to reaching a point wherein you might just have a very small, like say 5 or 10% or 20% or 30% left by the time you finish Series A, B, C, D, E, and various rounds of investment capital raise. You'll be left with nothing, right? So in order to avoid that, we have designed, and of course the investor pressure, as I told you, there are a lot of targets, timelines, and a lot of micromanagement. If you're not okay with these 2 points, that's where we will be helpful to you. We have a fixed model, a dilution structure. We do collateral based debt as a investment. So we invest collateral based debt into your company, and we can get into the structure of that, etc., in the later on in the next parts. And then every time you raise capital, say this year you need say $10 million, and next year you need say another $10 million, for various purposes. You might want to purchase other companies, you might want additional working capital, or whatever it could be, like various reasons, right? You might want to raise capital again and again and again. So that's where you don't need to shell out more and more dilution of your stake. It is capped. And as I said, it is collateral based debt. So we have, as I said, we my company is networked with around 1,000 crore INR land banks in India. So all our land banks are in India. So we have a huge database, and we have enough funds to back up all those collateral based debt, the credit line. So once we start working with you, and once we start investing that debt capital, we don't take any risk on the repayment of that debt and the collateral, of course, because we don't operate any of the business. You will be the business operator, and we cap the dilution, so you don't need to repeatedly dilute stake. And we bring in as much capital as you need. Suppose you want, say, $10 million, $15 million, $20 million, because we understand every business is different, every business strategy is different. Some businesses, they understand the buy and build model, which we will go into. So they want to purchase a lot of companies, and for that, a lot of capital is required. Sometimes, the entrepreneur, he wants to. There are a lot of it all depends on the project report, right? So you might need any amount of capital, as long as you can substantiate how you intend to repay and break even. Okay, we will support you. So there is no upper limit on the kind of amount of capital that we can bring to the business. and the process is the same whether you want to raise 5 million or 10 million, or you want us to raise say, 15 million or 20 million. The process is the same, everything is the same. You just have to get started. Once you start, everything else follows, right? And there has to be some skin in the game. Like in some businesses, they are import export companies, they have purchase orders. Some companies are into tech and SaaS and real estate. Some businesses are real estate intensive. Like the business by itself might have a lot of real estate. Some businesses may not have that real estate. So we see like how we can customize a solution. So fundamentally, you're capping your dilution. You don't need to repeatedly dilute, you know, get more and more dilute your share. And then we only supervise, like my company would do the audit and supervision of the firm, right? Also in some cases when it comes to, so in investment, so there are two pieces, one is equity and one is debt. So what I covered is debt. There is unlimited debt capital perennially, that is eternally, for fixed dilution. That is one model. Second model is equity model, wherein we don't infuse any debt capital, but we have our own pool of funds and then we invest capital into your business. For that, there will be a valuation process. That's a standard dilution, valuation process, and then we will take a stake in your firm, and so on and so forth. And every time the company wants to raise, capital, obviously there will be a valuation round, and uh, you will have to keep diluting funds. So there, both these models are available. The equity module is not our core forte, but we can do that as well. So we have enough funds. If we see that it's more sensible to do pure equity, we can just go for that. Then we have a loan service as well. So some businesses where we want to probably just see how the company performs over some period of time. We'll just probably give a loan and just be a loan service provider, and that's about it. We will not go beyond that. And then we can see the performance for a year or two, and then we can invest eventually. Then we have the IPO mode, wherein all the companies that we invest in, we take those companies to IPO anywhere on the globe. And all of this is a step by step process, right? um, so first you submit all your details, then we have get onto the call, we understand your process, your business, everything, and then we do the agreements. And then comes these two pieces, which is very important: company and SPV setup, share capital infusion. So the first four pieces is something which you need to pay for, obviously, because till you are invested with us, you need to at least start. You need to start somewhere with us, because we are bringing in a lot of collateral. See, because if you see this point 0.5 onwards, collateral injection is what my company does. So we can bring in as much collateral as required. Suppose you want, say, $10 million, right? We bring in around $15 million, around 1.5 times the debt that we are infusing, and all that collateral is based out of India. So all the paperwork, legal structuring, everything happens in India first, and then in UAE or any other country. So you need to give us that assurance that you will do business with us, or you need to start up an office in Delhi with us, and enable all the process for company setup, the SPV setup, the share capital infusion in India, right? And if you want us to raise capital through, say, UAE, then we need a company set up in UAE. So, to explain this better, the debt that we infuse can be infused from India or it can be infused from UAE. Okay, we need a SPV for the collateral, right? And we need a company registered. The company serves as the umbrella company, which will eventually purchase other companies, your existing company and other companies, right? So this helps, like starting a company from scratch helps us skip the tedious due diligence, and the risk of, you know, a due diligence going wrong. Because if we start investing directly into your firm, Just for the due diligence purpose, it might take a long time. So instead of wasting so much time, it's better to start off a company from scratch and do all the paperwork in that company and use that company to purchase your existing company. I hope that answers, if you gets you some clarity. Um, so the debt, when we raise it from UAE, there is a different rate of interest. It's less than 5%. And if we are raising the debt in India, it's around 8 to 9%. It's all collateral based debt, right? So, and we bring in all the collateral required. We are ready to put any amount of collateral. It all depends on your project. So for solar and capital intensive companies, which are real estate intensive, obviously we need more capital, so we'll bring in more collateral into the picture. So what is your skin in the game is the question. Like when you are associating yourself with us, where do we start? Like if you say that okay, now you just start investing in my company directly, it might be a challenge. It might be a challenge because there's a heavy due diligence process. If you're ready to submit all the due diligence paperwork for that, then we might consider it. But investing directly in a firm through debt capital, okay, and all of this, what I'm talking about is only debt capital. I'm not talking about equity capital, loan, and IPO. I'm not talking about all those as of now. I'll cover that next. So all the discussion so far is only for debt capital so far, right? So if we have to directly invest capital into your company in the form of debt, and you don't want to start a company from scratch, then your company has to be registered in India. And if it is registered in Delhi, it is even more easier for us. Okay, we can discuss about this because there are companies which have a presence in India. So because our funds are based out of India and UAE, so if your company is in UAE or India, it is very easy for us. Okay, but it's not like you have a company and everything happens overnight. So we have to inject collateral into that because the debt which we raise is always secured debt. We don't invest unsecured debt. If you have real estate in your company, we might see how you can utilize that real estate. But that real estate has to be within India, or if it's in another part of the globe, we can see how we can leverage on that. But fundamentally, it is all collateral based debt. So my company has to do all the paperwork for injecting collateral based debt. So we need the collateral injection, we need to put the necessary share capital, we need the company structure in place. All of this is the pre-work. The pre-work is a foundation to start somewhere. And once it starts, that's when the credit line flows in. And then there is a success fee uh, post credit line disbursement. Apart from the partnership, of course, we have a partnership agreement with you first, and then we have all this SPV company work and all of that. And then the share capital, you infuse that into that company, and then the collateral injection work is done by my team, and then the credit line is disbursed, the success fee happens, and then we do an every year we do a continuous audit of the partnership accounts. And then there is an exit is, again, we plan it as per your um, what is your roadmap like. Do you want us to be associated with you continuously or not? I mean, it's a something which we can explore. It's on a case to case basis. So not to confuse you here, I would like to reiterate this point again. So for debt based fixed dilution model, right, the step by step process is there is a company, an SPV, which you need to set up. We will help you set up that. We will do that because we have direct tie up with all the necessary free zone banking, investment banking, everything is already in place. So we will do all the paperwork for you. It is not like you have to break your head to start all of this, right? So you do all this paperwork, and there's a share capital that you deposit in the company, and that same share capital my company will use for the collateral injection paperwork, and the collateral is in India, as I said. Our my collateral bank, which is around 1,000 crore turnover, sorry, 1,000 crore INR um, asset base, is in India, right? So this structure, this company and the SPV structure, we know how to do it, and that's where my company comes into picture. After you set up all of that, and since we are partnered with you, and everything is legal and everything is pre-vetted, everything is on paper, obviously all of that forms as a base for us to get started, and the credit line flows, and then we have the audit and every year, and then we have the exit strategy, which we plan with your firm, right? Now, if you say that you want to take profits every year, we can do that. If you say that no, you want to just sell the company after 5 years, we can do that as well, and so on and so forth. Now, coming to equity capital infusion works a little differently. If we feel that we want to invest in your company just equity capital and not debt, in that case, my company will do, more often than not, we do the due diligence on our own. So you're not spending anything for the due diligence, right? We will travel to wherever you are, we will visit, we'll do all of that. But it's all subject to the interest from my pool of funds and the fund owners we have, the UHNIs we have, and the funds we have. Only then, if you're interested to take share in your company as a equity investor, we will do that. But more often than not, we do only debt capital infusion, and that is collateral debt, because SMEs and startups are very, they do not give that kind of returns which the VCs and private equity houses take. Like it's not like a 10x multiplier, 12x multiplier. We don't. It's not so easy to reach those numbers for SMEs and startups. It could happen, it may not happen. So it's a risk for us. So that's the reason we are capping our risk by getting in collateral and raising funds as collateral based debt. Right? We don't want to take so much risk because we do not operate any of the businesses. Plus, we do not want to micromanage you. So, in order to reduce our risk, we are bringing in that collateral. We are helping you grow, and then as you grow, we'll also see a performance, and then we can see like what more we can do. But we have to get started somewhere. So the collateral risk, so you as a business owner will now have the risk to perform, because you have collateral tied to your business, then you have a loan tied to your business, and you have to at least pay back the loan. Even if you run the whole company in loss, at least you are bound to repay the debt, right? So that's the reason we are investing in the form of debt-based collateral based debt. The rate of interest is very competitive. It's very less in UAE, and the taxation is better in UAE. So we encourage you to start something in UAE with us. But if you say that no, you want to start something in, say, India, we can do that in India as well. If your company is in the US, we can do that as well. But we need to start somewhere, right? And we will customize a solution for you. But if you're saying directly invest in your firm, then it's going to be complicated because there's due diligence work. Plus, we will have to take partnership in your firm. So, would you be willing to give away your partnership without the fund disbursement? No, right? You will want us to give you the fund, and then you will want to go with a partnership with us. So, in order to offset all those issues, it's better that we start a partnership, a company, and then you know we use that company to do everything else. Because if I ask you today, okay, let's you make us your partners right away, you would say, where is the fund? You give us the funds and we will give you partnership. So it's like an chicken and egg situation, and that it can go on and on. The discussion will go on and on, we'll never sign the deal. And also, as I said, it's always better to start things afresh, because there's a due diligence paperwork which is, it's a very painstaking process. There could be some legal complications in your company which we might not be aware of, or some issue, something can happen, right? So in order to offset all of those issues and to start to move forward, we have designed this model of starting a company from scratch. Also, we can, if you want us to purchase a company for you, we can always identify an existing company for you, and we can become partners in that new company. So it's not like we have to start a new firm from scratch. We can always purchase a existing company, and the funds to purchase that company, obviously, like, it's not like we are going to purchase that company for you. You will have to identify that company, put in the needed funds to purchase that company, right? So purchasing a company could be a complicated process. It's kind of a laborious process. It might be expensive and all of that. So instead of purchasing an existing company and putting in all that money and all of that, the lower cost, the lesser cost, and the least risk way is to start a company from scratch. um, right, and we can discuss all of this on a call. This is just to help us get started. And then the collateral is a big risk for us, because we are bringing in almost 1.5 times the debt. So that is a risk that we are taking, my company is taking as a risk. We are giving you the collateral. We are saying, hey, entrepreneur, we are getting you the collateral. You don't need to break your head for getting in the collateral. uh, and sorry to jump into the debt based model again, but I was talking about equity capital. So, equity infusion capital, equity capital infusion, we might do the due diligence ourselves. We might come to you, do the due diligence, do all the paperwork, and invest directly into your firm. But that is all very subject to the interest of the fund pool that we have. And for that, we, of course, we don't need to start a company from scratch, or we may have to, like, we'll have to figure it out. I mean, it's not something which I can tell you as a cookie cutter approach. And coming to the loan process also, it is not a cookie cutter approach. Sometimes we might have to require you to start a company from scratch, or sometimes you might directly invest in your firm, right? We can disburse the loan directly into the firm, but there's a risk out there. If we directly give you the loan, tomorrow after the loan is disbursed, you might just cut us out of the success fee that we deserve. So that's the reason we always encourage that you form a company with us separately, which acts as a starting point. And because we don't want to do all the paperwork and put all the investment, do everything, and then you all back out of us, back out after you get what you had to get. In a separate video, I'm not sure whether you have gone through that video. The, here I have covered, yeah, in the separate video, that these are the risks that my company always is trying to. There's a lot of damage control which might have we have to do. My company runs the risk of, like, collateral risk, fraudulent transactions of promoters in the past, poor operations of promoters in future, fraudulent transactions, delayed payment of fees. All these risks, like strategic advisory risk, is we run the risk of giving you wrong advice based on the picture and the commitments that you give us. So it's a big risk for my company. So in order to safeguard ourselves and to make it a very easy process for all of us, right? So we have come across we have designed this SPV, a new company structuring, and all of that, to get us all started. Otherwise, it's going to take a longer time to get started, right? Now, the main point after this is the timelines and costs. This is a very good slide. You can spend some time on the slide. um, so due diligence is as there's a legal, financial, and all paperwork due diligence. But before that, there's a preliminary due diligence, which is at a very native stage, wherein we visit your office and we might um, just go through all of this paperwork. So my team is putting that effort and time to visit you, to do all of that. All right. So travel is not always mandatory. It depends on a case to case basis. But preliminary due diligence is the first step. The visit will be required. We don't know who you are, where you are. I mean, we get so many leads. We get all kinds of people, businesses, and entrepreneurs. So we cannot work with every entrepreneur. We can only work with those entrepreneurs who are willing to put in their effort as well, right? We can't just come, travel to you, do all that. And as I said, in equity investment model, we might come and travel to you, do the due diligence ourselves. As I said, it depends. It depends on a case to case basis. I cannot, give you a cookie cutter approach. But if you want unlimited capital at fixed dilution, all of that, so obviously you'll have to, there'll be an office visit, there will be a preliminary due diligence. So the costs and etc. It depends. We'll have to, if it's international travel or whatever. It's on a case to case basis. And due diligence required also, like, if we require you to give us a report, say from any due diligence firm, we will tell you the firm name and you can give us a due diligence report. But if we feel that, yeah, it's worth taking a risk, then we will do the due diligence. That's the equity model. So this takes around, the preliminary due diligence takes 10 business days. Then the company registration happens, wherein there's the free zone of UAE involved. So every year there's a license fee of 20. I mean, the initial starting 1 year license is 25K AED, and every year you have to renew that license. It's around 13K AED per year. Otherwise, you'll have to close the business after 1 year if you don't renew it. And that renewal is paid as a business expense. Like once the credit line is in place, that credit line can be used to, pay the renewal fee and the, post the audit and taxation fee and all of that. So first, when you start off, you'll have to register the company, and you have to put the share capital, which is around the same share capital. We are using it for the credit enhancement work, the collateral work, right? So the share capital that you need to put into the business is at least minimum of $36,000. You can convert that. So this fee is not that a fee you pay to us. This is the fee. This is a the fee that you would pay would be for the company registration, right? Since my company already has a tie-ups with the banks and the, various free zones and all of that, so we do all this paperwork for you. It is not like you have to break your head, and it's easier that way. So that way, as we know all the timelines and everything is in our control, we are able to do that in a fast turnaround time. So you have to be ready with the company license fee and the uh, share capital of $36,000 if we are to work on raising capital through UAE route. If it is like, if you say, no, I don't want it in UAE, you want to do it from India, obviously this whole cost is way lesser in India. You don't need so much, you know, uh, you don't need 30K. I mean, you can we can kind of cut short this whole to probably half the price. So if you add up 25K AD and $36,000, it comes to around uh, 38 lakh INR or something like that. You can cut that into half. That is, you can do half of that. It comes to around 19 lakh. So 19 lakh, if is that you want to start the company in India and then eventually move to UAE, then it's half the price because the share capital requirement, the everything is cut short by half, right? but it will take a longer time. It will take in excess of 80 to 90 business days. That can go on a little bit more, like it can take another, it can go to 120 days. If you have that much patience and all, we can do it through India, right? The share capital requirement for whether it is in India or UAE, it is, see, for UAE it is minimum 30 lakh INR. Okay, for the share capital, the same share capital we have to show it as a minimum capital, and also we have to show that for the credit enhancement paperwork, the SPV, collateral injection, all of this is going to be a, so you will have to think about, you should be ready with all these funds. Now, if you want us to do it through India, as I said, it will be half of that. It will be half of 38K lakhs. But the share capital, we might require you to put some additional share capital. It depends on the quantum of funds that you want to be raised. Now, for instance, you have a company. Obviously, day one, it's not going to happen, right? Like you just walk in and then walk out with money. It doesn't work that way. There is share capital required, credit enhancement capital required, there is paperwork required for the collateral injection. All of this is a process. I don't understand. If you all understand how this works, we can get onto a call and I can give you more clarity, but I need to explain these points. Okay, so there's a the green part, there's on the slide, company registration and bank account opening in India. It's around 10 to 20 business days. And this slide is self-explanatory. You can always go rewind and see this. These are all the timelines. And for equity infusion and loan infusion, whether we have to start a company from scratch, a company in SPV from scratch, or we have to directly give you the loan, it's on a case to case basis. It's on a case to case basis. That's the reason we are encouraging you to fill that form and give us those details so that we can start. So, the important thing is to get started, right? We have to start somewhere. And then we are bringing equal risk to the table. So, we are ready to put in as much collateral as needed, no matter where your business is located. I think I'll. You can always rewind this video, and you can ask me questions if you've been if you got confused with any information. So my company is taking the risk of injecting collateral as needed. So that is a risk we are taking, and to offset all the risks of due diligence and fraudulent issues and all of these issues, we are starting something from scratch. It is easier that way, as you buy other companies which are already existing in the market and get your market dominance. This umbrella company which you start with us will form as the base to purchase other companies and also to do all the various transactions, uh, etc. etc. Okay, it's already 45 minutes now into this meeting. Uh, okay, so the next is the buy and build model. This is a beautiful model which we always encourage our entrepreneurs to think of. Why would you build something if you can buy it, right? You can go through the slide, right? So we encourage you to purchasing existing companies out there in the market instead of always trying to do your own thing, always. That becomes a long process. And we are here to support you with all those decisions, all that capital work, all that strategic work. We are there to handhold you and support you with all of that. Please go through this once and see. Second, this piece is a referral program which we have in place. If you know any associate partner or any partner you feel that they could leverage on our services, please refer them and make your success fee. please let us know about that company, and we will talk about this one on one once we go through that company's deck and profile and all of that. We see that, yeah, there is a good fit. We will definitely consider the company which you refer. Okay, there is a there's a success fee you make here for referring. Now, before I jump into geography, I would like to stress upon this purple piece, the equity infusion and loan infusion, case to case basis. Yes, this is like we have a pool of funds, we might just want to invest, and you just don't have to move a piece. We'll do the due diligence, we will do the investment, and the capital, uh, the dilution will keep. It's not the fixed dilution model. Every time we invest, there will be a standard valuation process, and you might have other investors in picture, so we will have to keep them in picture as well. Now, I brought the attention to this slide once again because my company's goal is to make things simple for all of us, right? We have enough capital. We have enough capital. We want to associate ourselves with you, and we want to start somewhere, and we want to be in a position to support you with your roadmap. So, the more investors you involve, the more complicated decision making could be. Like if you have already some existing investors and then you bring us in, obviously they will have their own interests and we will have our interests, and there could be a conflict of interest and it could become complicated. We'll have to work it out. If you already have some investors and you come to us at a stage wherein in an advanced stage, then we will have to work it out. Now, if you want us to do an IPO also, or anything, right? We are there as a company. The Gazelle Partners with Polaris Solutions Private Limited is enough, I would say, enough for you to reach all your capital infusion and strategic consulting goals. You don't need anybody else in the market. You wouldn't, because we have enough to help you with. So the more, if you are again involving other investors, we are not averse to it, but we kind of find that it could get complicated. Like there will be more people to manage, etc. Right? So in that sense, now comes the geography piece. Yes, your business can be located anywhere on the globe. The businesses you want to purchase can be located anywhere on the globe. We will design a strategy to purchase those companies and to invest in your firm irrespective of where you are located. So you can be anywhere. Then we have our direct tie up with, we have a network every, like in different pieces of the globe. Like we have direct tie up with the Africa Comesa trade, it's a government entity. We can help you establish business in Africa from scratch. uh, of course, we can discuss the costs to that. We will help you get all the distributor network and the customers, everything. This will be a pre-vetted deal through the government of Africa and India. So if you want to expand in Africa, we are encouraging uh, you know, all of that. So please feel free to reach out to us. Now, I have put these flags out here because primarily our funds are from either India through the investment banks, the banks, the private fund pools, the family offices, UHNI pools in India and UAE. So I have put these flags. And Africa, as I told you, we can help you expand in Africa. We can explore uh, various trade programs across the globe, you need to get started with us. Then we can do anything and everything, right? Then United States is what we are now focusing on. We are trying to look for startups, SMEs in the United States. But I'm not saying that we want only from the United States, but it is our focus area. Um, but if your company is elsewhere in Europe or Middle East, we are open to that. We are open to that. So you are free to refer any of the folks, make your success free. You can you know go through all these slides, and actually there's another video which I made, which I don't know whether you have gone through that video, but you can go through that video as well. uh, and I'm back scrolling here, but this is just for you to know that there's another video out there and you can check out that video as well, right? Okay, then. So this is what I had to cover majorly in this, video. If you have any questions, please feel free to ask. Pause this video anytime. Go through the information. Uh, talk to us. Reach out to us. We will have a customized call for you. And there's a form which has been shared. Please go through that form and feel free to reach out to us anytime. Thank you so much for this time. It's now 52 minutes down. I know it's a long call, long video, but I think I have covered most of the questions. So we are sector agnostic, we are geography agnostic, we are very flexible. Once you start with us, everything else follows. So you have to start, and then everything falls in place over time, right? I think this is one slide. I'm so sorry, I have covered this in the other video, but this slide, I think this slide probably needs some attention. It's unlimited capital forever is one USP. It is for the debt capital infusion, because we are capping the dilution. Also, competitive and transparent rate of interest. Yes, if it's through UAE, we get a very competitive rate, and this fund it could be a mixed hybrid of banking, investment banking, private equity funds. It could be a little of family funds. It's a mixed hybrid model, and then we can restructure all your business, whether it's in loss or profit. We can help it expand through horizontal integration and vertical integration. And this part has already been covered in the other video, but just in case you did not go through this, take a moment. That's a long video as well. So apologies if this video was too long for you, but yeah, this will help you. Like, you can always quickly go back and reference. Yeah, thank you so much for your time. God bless. Merry Christmas and a very happy New Year.